Hey everybody, Chuck Barone here, Friday, September the 2nd, 2022. Another crazy week with another crazy finish, man. This drama we're living through is so much fun, isn't it, guys? Anyway, before we start the show, as always, I just want to thank everybody for their support for the channel and watching the videos and all the wonderful thing you guys do for us every single day to make the channel a success and to make our job a lot of fun. We really appreciate your guys' support. I'm in the markets today. Another crazy day in the markets. Stock market starts the day pretty optimistic and ends up cratering at the end of the day. Stocks down across the board. A crappy finish to a crappy week. I think the stock market's having a little bit of a pity party for itself right now. I think that this is just the beginning of a correction in the market. Even though there's a lot of conflicting signs in the economy, and we'll talk about the employment numbers in a little bit here, the stock market's coming to grips with recession is coming, because they understand, like we do, guys, that interest rates are not what's going to happen. The interest rates are going to lead to the recession, and the recession has to be deep enough then to dampen demand enough to bring prices down. That's what we know is going to happen. The stock market's kind of coming to grips with that, and you can see the results in another down day and another down week for the markets. The bond market today was up small, but just enough to, of course, St. Jerome and his minions in the bond market today, driving yields down. The 10-year setting at 3.19%, down about 7 basis points. They're going to drive that 10-year yield down to one that's a little more palatable for the market, for the stock market, to try to keep stocks buoyed up. I don't know how they're going to do it much longer. The 2-year settling at 3.39, it's down 12 basis points. So, there was a little bit of demand today for 2-year bonds, but the inversion's still pretty good. It's 30 basis points. I think that the signal it's sending, recession coming, is one we should all pay attention to, because it's not only coming, it's already here and starting to pick up some steam. The dollar today had another day in the market. The dollar is king right now. There's nothing to compete with it. Sitting at 109.61 in the dollar index. I don't know where the competition for the dollar is coming from. It's good and bad. The dollar's good because it keeps imported prices down when the dollar's strong. So that's a little bit of a benefit to consumers. Not so much, however, to our corporate overlords and their multinational businesses, who do a lot of the importing into America is from American companies overseas. They're not digging this strong dollar so much. But as the Fed continues to raise rates and stays ahead rate-wise of all the other governments around the country, I don't see how the dollar really has any way to come down very much. Metals today, in spite of the strong dollar, had a decent day. Gold, $1,711 per ounce, up about $12. Silver, $18.12, up about 22 cents. So back above $18 for silver. Hopefully it can hold that support. We'll see what happens. I don't know if I really believe that the metals and the metals are strong. Dollar strong, metals weak, dollar weak, metals strong kind of ratio thing, the way it works there. I don't know how much higher the dollar can go, sitting at a 25-year high right now, but I don't really see any reason why the dollar is going to come down from these heights right now. So, metal people, hang in there. You'll probably have your buying opportunity. Oil up today, $87.16 per barrel for West Texas Intermediate. Natural gas actually having a down day today, down 4% at $8.90 for their million British thermal units. I think most of that natural gas stuff is profit taking before the weekend. I guess there's been some developments with Russia and the Nord Stream pipeline thing, where now they're cutting it off completely, saying that they're past maintenance now, there's issues with it. So I think that's the first sign of where it's going to be for Europe this winter with natural gas from Russia. Not a happy time. I think some traders, though, taking some profits on natural gas, just in case there's any developments over the weekend where the pipeline gets turned back on and maybe natural gas prices get some pressure. Bitcoin down small today, still sitting at just under 20,000. I'd like to see Bitcoin get back above 20,000 and start building some strength there. It seems to be having some difficulty getting above that 20,000, which is now, once it breaks through there, it's support when it's above it, right? Once it breaks through, now that even number, that 20,000, becomes resistance, and it looks like Bitcoin's having a little bit of trouble breaking that resistance. If it can and start building some consolidation above 20K, that would be a pretty good sign for Bitcoin. And news you guys need to hear today. Today was a day we were looking forward to. So today the U.S. the government announced they had added 315,000 jobs in August. They were expecting 300,000. So it's pretty much in line with what they were expecting. Big surprise, though, considering that just a couple of days ago we got that ADP payroll report, and they were only showing 132,000. Somebody's got some splaining to do here, because those numbers that's a pretty big gap, 168,000 or 107, actually 183,000. How could they be so wrong, ADP be so wrong on their estimates? I don't know. But employment's still looking strong. I was reading reports today that there's still 2 jobs for every person looking for one. Again, I don't know what those jobs really are consisting of, but when I did ask you guys to respond in the comments about jobs in your area, the vast majority were reporting that jobs are plentiful in their area, that are good jobs, tradesman jobs, welders and carpenters, and, people that can make real money, not just fast food hamburger flipper jobs. So there's jobs out there, guys. So if you're looking to make more money, you're looking for a new line of work, you're looking for whatever reason to make a change, this is a pretty good time to do it, because it looks like there's a lot of jobs with not a lot of competition for those jobs. The unemployment rate, along with those numbers, oddly, the unemployment rate shot up a couple of percentage points from 3.5 to 3.7%. They were explaining that as more people coming back into the labor pool. A lot of people were just not even trying to find work, kind of just sitting there, collecting unemployment or whatever benefits, or just living off the fat of the land, I guess. Now they're coming back into the labor market, which will help take some steam off of this, hopefully. Let's get those people working rather than living off benefits, and get some of these jobs filled. The earnings report was the one I was looking for today, and it came up kind of with a mixed numbers. Earnings are still going up, but it slowed down a little bit in August, only going up 0.3% for the month versus 0.5% in July. So wage and costs to businesses to have employees are still going up, but not as steeply as they've been. I really still believe the Fed will raise 75 basis points this month. I think it's around the 20th or 21st where they have their FOMAC meeting. And this, though, does give them a little bit of breathing room where they can bump a half rather than 3/4 if they decide they don't want to put so much pressure on the markets. Let's keep that in mind, guys. It's really weird. It's like employment is the one thing holding this economy together right now. And it looks to me like it's the Fed's mission, in their mission to bring this inflation down, to knock those employment numbers down. So it's going to be fun to watch how this all plays out. Another big news today, I saw in real estate news, August was the first month since March of 2021, which you'll remember was the basic start of the pandemic, where houses sold, the house sold for less than its list price. So the first time since in a year and a half or whatever, since 2021, houses now are selling for less than their list price, not 25, 50, 60, 100,000 over list like they were for the last year or a year and a half. So again, more signals that the correction is on in real estate. We've been talking about that just ad nauseum on the blog. No, guys, real estate's going to correct, so do what you have to do now to protect yourself from that. Also, some interesting news today. Credit card rates. We've seen interest rates go up on treasuries and the Fed raising the overnight rate. Well, our friends, the banksters, the greediest people on the planet, now are raising credit card rates to go along with all these other rates. So now credit card rates have reached their highest level in 25 years. So if you have credit card debt and you didn't have motive to pay it down quicker, you do now because rates are already at 25-year highs. I think they're going to continue to go up. And of course, it's always fascinating to me how credit card rates instantly rise with the Fed, but savings account rates, money market rates don't. Kind of we know what the story is. It just, I guess you have to mention it, right? Also interesting today, equity funds. Bleeding cash again this month, more than $10 billion withdrawn from these equity funds, mutual funds. That's putting pressures on these managers, guys. They got to sell stock to raise that $10 billion every month, which is obviously putting pressure on the market, contributing to all these down days and down weeks we've been seeing on the stock market. I really don't believe that that's something that's going to end soon. I don't see, the Joe Schmuckatelli out there getting real bullish on the stock market right now. I just give you guys a warning. If you're among the people pulling your money out of stock funds, out of equity funds, be cautious putting it into bond funds, guys. It's okay to buy bonds, but bond funds in a rising interest rate environment are a no-no, because what happens is if you're holding a bond fund and your yield is 2%, and now rates go up and the new yield is 2.25%, your fund manager is going to start purging all the bonds in your fund to get bonds at a higher yield because he has to match that 2.25%. So what happens is you're basically setting yourself up for every time they raise rates, you're going to take a loss. So be careful with bond funds, especially with an environment where rates are going up. And also some interesting news today. Bank of America coming out with a new program with 100% financing. I guess we still haven't learned the lessons we needed to learn from 2005 through 2008 about 100% financing and how that ends up. And the comical thing to me is, I'm a mortgage guy. I do loans and have been doing them for friggin' forever. People can't afford the mortgages with a 5% down payment. How are they going to qualify with 100% financing, which typically has a higher rate than our typical regular conventional loan would have? So I saw that, I just had to chuckle to myself. It's like, okay, guys, we believe that this is going to make sense somehow. I think Bank of America is they're just a little bit desperate to get some traffic through their mortgage departments because mortgages are crickets right now. I don't see that ending up very well for the bank or for the people that decide to do that kind of financing. And lastly today, before we wrap up for the week, guys, I was looking at a historical chart. The Fed's target rate for the inflation rate is 2%. And we've been pretty fortunate. We've had that 2% for a pretty long time now. About 20 years they've been able to, with some aberrations in there, but for the most part, been able to keep their at least declared inflation rate at 2%. So I was looking back through history. So check this out. In 1966, we had a 2% inflation rate, and it was pretty steady before 1966 because we weren't spending money like crazy. We weren't the big deficit spenders we are now. And what happened is in 66, Lyndon Johnson changed some stuff, and he wanted to do a lot of social programs, Medicare, big social programs. Microphone keeps falling off. Medicare and a few other programs. And at the same time fighting the Vietnam War, which caused big deficit spending, which caused inflation to start, which we saw all the way through the 70s. Now check it out, guys. 66, we had 2% inflation. Johnson does his thing. Nixon follows suit. We got a whole bunch of weak Fed chairmen till we get Volcker. The next time, between 1966, what year do you think we finally got back down to 2% inflation? 1997. So from 66 to 97, we had inflation rates as high as more than 10%, and we didn't hit that 2% target that the Fed has now and has had for about 20 years or 15 years or so. It took 31 years to get back down to that inflation rate. So just to give you guys an idea of what we're looking at with this inflation, if it turns out to be as entrenched as it was back then, we're in for the long haul here, guys. So the advice we've been giving you guys still goes. Save your money. Invest it conservatively. Try to pay down any debt you have if you possibly can. If you possibly can help it, do not add on any new debt, and be a thoughtful spender. Take care of each other. Take care of your family. Focus on what's important, not on getting rich, because now's not the time for that. And, take care of yourselves, guys. Tough times are coming, sadly. And we're going to give you guys our best advice on how to navigate those tough times. But just know the basics we've been talking about already is where you need to start. And we'll come up with more ideas about how to navigate this situation over the course of the next long period, it looks like, before we get back to what we would consider normal over the last 15 years or so. Anyway, guys, that's all we got for today and this week. We really appreciate your support. By the way, I want to mention, I got a lot of messages yesterday about people asking about supporting the show. I guess they because it's Manarino's Day on the 1st, to ask for support from his viewers. People want to do the same thing for our show, and we really appreciate it. If you go to our YouTube page, there is a link there we're going to put on today, so you can, you can link to our website, chuckbarone.com, and there's a spot there right directly to our PayPal account if you guys decide you want to chip in a couple of bucks. We call it Buy Chuck a Cup of Coffee. I'm not looking for anybody to no big donations, please, okay? Unless you're Peter Thiel and you want to give me $1 million to broadcast, whatever. But if anybody feels, we've had a lot of people asking, so if you feel like you want to support the show, contribute a couple of bucks, chuckbarone.com is where you need to go. Anyway, guys, we appreciate your support as always. Have a great weekend. We get college football kicking off this week. Less than a week until the Bills play the Rams to kick off the NFL. I couldn't be more excited, man. I'm going to focus on the good and get away from this bad for a little while. Until we talk again on Monday, guys, take care. Thanks.